Anticipated 50% surge in market demand across automotive retail and telecommunications industries by Q2 2026, a comprehensive report. Date, February 4, 2025. Time, 10:31 a.m. Comprehensive summary. The projected 50% surge in market demand across the automotive retail and telecommunications industries by Q2 2026 is primarily driven by rapid technological advancements, particularly in artificial intelligence (AI). This growth is influenced by a combination of innovative product development changing consumer behaviors and geopolitical factors reshaping market dynamics. Key drivers and trends. 1. Technological advancements. Artificial intelligence (AI) is a pivotal force driving the semiconductor industry. The adoption of electric vehicles (EVs) and advanced driver assistance systems (ADAS) in the automotive sector is significantly increasing the demand for high-bandwidth memory (HBM) and solid-state drives (SSDs). Industry growth. Companies like TSMC and Micron technology are expanding production capacities in anticipation of heightened demand. Analysts predict substantial revenue increases from AI-related sales, with DRAM prices projected to rise by 13% to 18% in 2024. And NAND flash expected to increase by 15% to 20%. 2. Market recovery. Following a period of excess inventory and declining consumer demand, the semiconductor industry is on the brink of recovery. Reports suggest renewed interest in high-performance components driven by AI applications. The market dynamics have shifted, with semiconductor sales beginning to rebound, indicating a potential end to the downturn that plagued the industry in 2023. 3. Geopolitical considerations. Ongoing trade tensions, particularly between the U.S. and China, are influencing supply chains and market access for semiconductor technologies. Export restrictions on advanced chips and materials critical for semiconductor manufacturing are reshaping global trade dynamics. The U.S. has imposed new tariffs on Chinese semiconductor imports, creating complexities for companies navigating these challenges. 4. Investment and funding. The CHIPS and Science Act in the U.S. has catalyzed significant investments in domestic semiconductor manufacturing, with over $200 billion pledged to revitalize the sector. Companies like Samsung and TSMC are poised to benefit from these incentives to expand their manufacturing capabilities in the U.S. Timeline of events. 2022, the global semiconductor shortage highlights vulnerabilities in the supply chain. 2023, companies announced strategic production cuts to manage excess inventory. The U.S. implements export controls on semiconductor technology to China. 2024, a recovery in semiconductor sales emerges driven by AI demand. The allocation of CHIPS Act funding begins to benefit key manufacturers. Mid-2024, reports suggest a downturn in the DRAM and NAND flash markets due to overproduction and geopolitical tensions. Q2 2025, market demand is projected to surge by 50% as advancements in AI and technology drive growth across automotive and telecommunications sectors. Commonalities and differences. A consensus among various sources indicates robust demand for AI-related technologies and memory components, underscoring AI's pivotal role in driving market growth. Some reports emphasize the risk of overcapacity in semiconductor manufacturing, while others maintain an optimistic outlook on long-term demand stability. The automotive sector is notably highlighted for its positive growth trajectory, aligning with sustainability goals and technological advancements. Conclusion. The anticipated surge in market demand across key industries is bolstered by technological advancements, strategic investments, and a recovering semiconductor landscape. However, geopolitical tensions and evolving market dynamics will continue to influence the trajectory of this growth. Industry insights and perspectives. 1. Automotive industry. The automotive sector is experiencing a renaissance significantly driven by AI and electric vehicle adoption. These factors are expected to contribute to a robust growth trajectory, with manufacturers ramping up production to meet evolving consumer demands. 2. Retail sector. Retailers are adapting to shifting consumer behaviors. With emphasis on enhancing digital platforms and leveraging AI for personalized shopping experiences, the integration of advanced technologies is expected to redefine customer interactions and supply chain management. 3. Telecommunications industry. The telecommunications sector is poised for expansion as AI applications enhance network capabilities and customer service efficiencies. Investment in infrastructure to support 5G and beyond will play a crucial role in meeting rising consumer expectations. Future considerations. As industries navigate the complexities of technological advancements and geopolitical challenges, companies must remain agile and innovative to capitalize on emerging opportunities. The ongoing evolution of AI will continue to impact product development, market strategies, and consumer preferences, necessitating a proactive approach to align with these trends. This report provides a comprehensive overview of the anticipated surge in market demand, highlighting the multifaceted drivers and implications for the automotive, retail, and telecommunications industries. As market conditions evolve, stakeholders must be prepared to adapt and leverage the opportunities presented by this dynamic landscape. The anticipated 50% surge in market demand across the automotive, retail, and telecommunications industries by Q2 2026 is primarily attributed to rapid advancements in artificial intelligence (AI) and its integration into various sectors. This growth is underpinned by several counterintuitive trends and insights that diverge from conventional expectations about market recovery and technological adoption. The following points highlight some of this counterintuitive information. 1. Technological optimism versus market overcapacity. While the market is projected to experience a significant surge in demand due to AI advancements, there is also a notable risk of overcapacity in semiconductor manufacturing. Some reports emphasize that despite the optimism surrounding AI, manufacturers are facing the possibility of overproduction, especially in the DRAM and NAND flash markets. This duality creates a paradox where manufacturers are ramping up production to meet expected demand while simultaneously risking a downturn due to potential oversupply. 2. Geopolitical tensions and supply chain resilience. The ongoing U.S. China trade tensions and export restrictions are reshaping the semiconductor supply chain dynamics. While one might expect that geopolitical conflicts would deter investment and growth, the opposite is occurring. The CHIPS and Science Act has catalyzed significant investments in domestic semiconductor manufacturing, with companies like TSMC and GlobalFoundries rapidly expanding their U.S. operations. This indicates a strategic pivot towards self-reliance in semiconductor production, countering the narrative of a solely negative impact from geopolitical tensions. 3. AI driving demand for older technologies. Interestingly, while AI is often associated with cutting-edge technologies, its growth is also reviving demand for older semiconductor technologies. As companies rapidly adopt AI across various applications, there is a simultaneous push for high-bandwidth memory (HBM) and solid-state drives (SSDs) that, while advanced, are built on technologies that had previously seen diminishing returns. This suggests that the rise of AI is not just about new technologies but also about maximizing existing capacities and capabilities. For market recovery amidst economic concerns, the semiconductor industry is set to see a rebound in 2024 driven by AI and high-performance computing needs, despite economic headwinds such as high inflation and rising interest rates. Conventional wisdom might suggest that economic downturns would stifle investment in growth, yet the semiconductor sector's recovery highlights its critical role in enabling technological advancement across all sectors, which in turn fuels demand even in economically challenging times. 5. Consumer electronics demand versus AI demand. The memory market is currently experiencing a peculiar situation where demand for AI-related components is rising significantly, yet consumer electronics demand remains tepid. This counterintuitive dynamic suggests that while traditional consumer markets are struggling, the rapid evolution of AI is creating entirely new demand streams that do not necessarily align with existing consumer patterns. 6. AI's role in labor shortages. The anticipated growth in the semiconductor industry is hindered by significant labor shortages, as seen in the challenges faced by companies like TSMC in recruiting skilled workers for their new facilities. While one might expect that technological advancement would lead to easier labor needs due to automation, the reality is that the semiconductor industry requires a highly skilled workforce that is currently in short supply, complicating efforts to ramp up production. 7. Funding challenges amidst expansion plans. Despite the significant funding provided by the CHIPS Act, many companies are facing delays and uncertainties regarding the distribution of these funds. This adds a layer of complexity to the anticipated growth, as firms are eager to expand but are often stalled by bureaucratic processes and the need for clear guidelines, counter to the expectation that funding would lead to immediate growth and expansion. 8. AI's uneven impact across sectors. While AI is lauded as a transformative technology, its impact is uneven across different sectors. For instance, while sectors like automotive and telecommunications are ramping up AI adoption, others are still grappling with the fundamentals of integrating new technologies, indicating that the surge in demand for AI is not universally felt across all industries. 9. Emergence of new business models. The rise of AI is not only enhancing existing technologies but also prompting entirely new business models and market strategies, such as embedded insurance and AI-driven service offerings. This indicates a shift in how businesses interact with technology and customers, suggesting that the growth driven by AI is fostering innovation beyond traditional product lines. 10. Environmental considerations in semiconductor production. The push for increased semiconductor production is juxtaposed with growing environmental concerns. The legislation allowing certain semiconductor facilities to bypass environmental reviews in the name of expediency raises ethical questions about balancing economic growth with sustainability, challenging the notion that rapid industrial expansion is always beneficial. In conclusion, the anticipated surge in market demand across the automotive, retail, and telecommunications industries by Q2 2026 presents a complex interplay of optimism and caution. While AI is a driving force behind this growth, it also introduces unique challenges and counterintuitive trends that defy traditional market expectations, making the future trajectory of these sectors both exciting and uncertain. The anticipated 50% surge in market demand across the automotive, retail, and telecommunications industries by Q2 2026 is underpinned by several significant drivers and trends that may often go unnoticed in conventional analyses. Here are the crucial aspects that stakeholders should recognize and consider. 1. Technological advancements in AI. The report emphasizes the central role of artificial intelligence (AI) in driving market demand, particularly in the semiconductor sector. While many focus on the immediate applications of AI, the significance lies in the broader transformation that AI technologies bring to the automotive and telecommunications sectors. The ongoing investment in AI capabilities leads to increased demand for high-bandwidth memory (HBM) and solid-state drives (SSDs), which are critical for processing large data sets efficiently. This technological shift not only enhances product functionality but also fundamentally alters consumer expectations and industry standards. 2. Market recovery from previous downturns. Many analyses may overlook the context of recent market fluctuations, particularly the recovery of the semiconductor industry following a period of excess inventory and declining demand. The projection of a robust recovery marked by rising DRAM and NAND flash prices due to renewed interest in high-performance components signifies a critical turning point. The anticipated price increases 13% to 20% for DRAM and NAND flash in 2024 reflect a tightening supply-demand balance that could stabilize the market, thus providing a fertile ground for growth across interconnected industries. 3. Geopolitical influences. the report touches on the complexities arising from U.S. China trade tensions and export restrictions on semiconductor technologies. These geopolitical dynamics are often regarded as mere background noise, yet they hold substantial implications for global supply chains and market accessibility. Companies must navigate these challenges to maintain competitive advantages. The ongoing restrictions and tariffs could lead to increased costs and potential supply shortages, particularly for businesses reliant on advanced semiconductor technologies. Understanding the long-term ramifications of these geopolitical shifts is crucial for strategic planning and risk assessment. 4. Investment and legislative support. The CHIPS and Science Act in the U.S. is a pivotal legislative measure that has catalyzed over $200 billion in investments aimed at revitalizing the domestic semiconductor industry. This substantial funding is not merely a response to current market conditions but is designed to foster innovation and secure supply chains against future disruptions. Many stakeholders might underestimate the transformative potential of this investment strategy, which could establish the U.S. as a leader in semiconductor manufacturing and innovation, thereby influencing global market trends. 5. Consumer behavior shifts. The report highlights shifting consumer behaviors, particularly the increasing demand for electric vehicles (EVs) and advanced driver assistance systems (ADAS) in the automotive sector, as sustainability becomes a primary concern for consumers. The automotive industry's pivot towards electrification opens up new avenues for growth. The convergence of AI and EV technologies will likely redefine market dynamics, creating a demand for components that support these innovations. Companies that can anticipate and adapt to these evolving consumer preferences will be better positioned to leverage the upcoming surge in demand. 6. Long-term growth versus short-term challenges. While the report offers an optimistic outlook for market demand, it also hints at potential short-term challenges, including overcapacity in semiconductor manufacturing. This duality is critical, while the long-term trajectory appears promising. Stakeholders must remain vigilant about the risks of overproduction and market saturation. The balance between sustaining growth and managing inventory levels will be a delicate task for manufacturers and suppliers alike. 7. Emerging technologies and innovations. The convergence of AI with other emerging technologies such as 5G and the Internet of Things (IoT) can often be overlooked. These technologies will play a vital role in shaping market demand and creating synergies across various sectors. For instance, the telecommunications industry will see enhanced demand for AI-driven solutions that improve connectivity and user experiences. Companies that can integrate these technologies effectively will stand to gain significantly in the coming years. In conclusion, the anticipated surge in market demand across the automotive, retail, and telecommunications sectors by Q2 2026 is driven by a complex interplay of technological advancements, market recoveries, geopolitical influences, legislative support, consumer behavior shifts, and emerging technologies. Stakeholders must consider these multifaceted dynamics to navigate the evolving landscape successfully and capitalize on the significant growth opportunities ahead. Ignoring these key drivers could lead to missed opportunities and strategic missteps in a rapidly changing market environment. In-depth analysis of the anticipated 50% surge in market demand across automotive, retail, and telecommunications industries by Q2 2026. The projected 50% surge in market demand across the automotive, retail, and telecommunications industries by Q2 2026 can be attributed to a confluence of factors, most notably advancements in artificial intelligence (AI). Here we will discuss 4 key points that warrant in-depth analysis and discussion regarding this anticipated growth. 1. Technological advancements and AI integration. The rapid integration of AI technologies is the foremost driver of the anticipated market surge. Sectors like automotive are witnessing transformative changes due to AI, particularly through the adoption of electric vehicles (EVs) and advanced driver assistance systems (ADAS). The semiconductor industry, which underpins these technologies, is experiencing a renaissance as companies such as TSMC and Micron ramp up production capacities to meet the escalating demand for high-performance chips. Key considerations: memory demand. The demand for high-bandwidth memory HBM and solid-state drives SSDs is surging as AI applications require robust processing capabilities. For instance, HBM's role in AI-driven applications is becoming indispensable, with projections indicating significant growth in capacity and market value. Supply chain resilience. The semiconductor industry's recovery following the global shortage during the pandemic has highlighted the need for local production capabilities. The CHIPS and Science Act has catalyzed investments in domestic manufacturing, which is crucial for sustaining the anticipated demand. Discussion points: how will the semiconductor industry manage the balance between supply and demand, especially in light of potential geopolitical tensions that could disrupt production? What strategies can companies adopt to mitigate risks associated with increased reliance on AI technologies in various sectors? 2. Market recovery and inventory adjustments. After a tumultuous period characterized by inventory overhang and declining consumer demand, the semiconductor industry is poised for a notable recovery. Reports indicate that memory manufacturers, particularly in the DRAM and NAND flash markets, are seeing renewed interest and price stabilization due to strategic production cuts and increased demand. Key considerations: price fluctuations. The semiconductor market's recovery is expected to be supported by rising prices, particularly for HBM and enterprise SSDs, as manufacturers focus on high-demand applications like AI and automotive technologies. Strategic production cuts. Companies are likely to continue strategic production cuts to maintain tight supply chains and prevent excess inventory, which could hinder recovery efforts. Discussion points: what impact will ongoing price adjustments have on consumer electronics and related industries? How can companies ensure they are not caught in a cycle of overproduction should demand exceed expectations? 3. Geopolitical influences on supply chains. The ongoing U.S. China trade tensions are significantly influencing supply chains and market access for semiconductor technologies. Export restrictions on advanced chips and materials critical for manufacturing are reshaping global trade dynamics, potentially creating hurdles for companies looking to capitalize on the anticipated demand surge. Key considerations: trade policies. The new tariffs and export controls introduced by the U.S. government may further complicate the semiconductor landscape, affecting not only access to materials but also pricing and availability. Global competition. As countries like China increase investments in their semiconductor capabilities, the competitive landscape is shifting. This may lead to a scenario where U.S. companies must innovate rapidly to retain their market positions. Discussion points: how will companies navigate the challenges posed by geopolitical tensions, and what strategies can mitigate risks associated with supply chain disruptions? In what ways can international cooperation be fostered to address common challenges in semiconductor production and distribution? 4. Investment and funding initiatives. Significant investments, particularly in the semiconductor sector, are being driven by government initiatives like the CHIPS and Science Act, which has pledged over $200 billion to revitalize the industry. Major manufacturers such as Samsung and TSMC are capitalizing on these incentives to expand their capabilities in the U.S. Key considerations: funding allocation. The effective allocation of CHIPS Act funding will be critical in ensuring that semiconductor manufacturers can increase production capacity to meet the expected demand. The establishment of research and development centers will also play a key role in fostering innovation. Long-term growth, as companies adapt to new technologies and market demands. Understanding the long-term implications of these investments will be vital for sustained growth in the semiconductor industry. Discussion points:
What are the potential outcomes of the CHIPS Act on domestic semiconductor manufacturing, and how might this reshape the global supply chain? How can companies ensure that their investments align with future market trends and technological advancements? Conclusion.
The anticipated surge in market demand across the automotive, retail, and telecommunications industries by Q2 2026 is primarily driven by technological advancements in AI, market recovery from previous downturns, geopolitical influences,
and substantial investment initiatives.
Understanding these dynamics will be crucial for stakeholders as they navigate the evolving landscape and position themselves for success in an increasingly competitive market environment. Here are three famous historical cases that illustrate similar themes of anticipated market demand surges in technological advancements impacting industries. 1. The Industrial Revolution, 18th to 19th centuries. The Industrial Revolution marked a significant turning point in history, characterized by the transition to new manufacturing processes and the rise of mechanization. Innovations such as the steam engine, spinning jenny, and power loom drastically increased production capacities across various industries, particularly in textiles and manufacturing. This period witnessed an unprecedented surge in labor demand as factories proliferated, leading to urbanization and a shift from agrarian societies to industrial economies. The advancements in technology and machinery not only transformed production methods but also changed consumer behavior. As a growing middle class emerged with increased purchasing power and demand for goods. 2. The dot-com bubble, late 1990s to early 2000s. The dot-com bubble represents a period of excessive speculation in the late 1990s, driven by the rapid growth of the internet and technology sectors. Startups focused on internet-based businesses saw skyrocketing stock prices and massive investments fueled by the belief in the transformative potential of the internet. This led to a surge in market demand for technology-related products and services. Companies like Amazon and eBay capitalized on this trend, significantly altering consumer behavior and retail landscapes. However, the bubble burst in 2000, resulting in substantial financial losses and a re-evaluation of the tech industry's profitability. Despite this, the period laid the groundwork for future technological advancements and the eventual maturation of the tech sector. 3. The rise of electric vehicles, 2000s to present. The electric vehicle (EV) market has experienced a significant surge in demand in the 21st century, primarily driven by advancements in battery technology, environmental concerns, and government policies promoting clean energy. Companies like Tesla have led the way in popularizing electric vehicles, challenging traditional automotive manufacturers to innovate and adapt to changing consumer preferences. This demand surge aligns with a broader shift towards sustainability and technological innovation, with governments worldwide pushing for reduced carbon emissions and increased adoption of EVs. The anticipated growth in the automotive sector illustrates how technological advancements and changing market dynamics can reshape entire industries, much like the expected 50% surge in market demand across automotive, retail, and telecommunications industries by Q2 2026. These historical cases highlight how technological advancements and shifts in consumer behavior can drive significant market demand changes, paralleling the anticipated surge in demand across various sectors driven by AI and other innovations. Future outlook: anticipated 50% surge in market demand across automotive, retail, and telecommunications industries by Q2 2026. The forecasted 50% increase in market demand across the automotive, retail, and telecommunications sectors by Q2 2026 is largely attributed to the rapid advancements in technology, particularly in artificial intelligence (AI) and its applications. This surge is expected to reshape the operational landscape of these industries, driven by several interconnected factors. 1. Technological advancements. The automotive sector is experiencing a profound transformation, primarily through the adoption of electric vehicles (EVs) and advanced driver assistance systems (ADAS). As companies invest heavily in AI-driven technologies,
The demand for high-bandwidth memory HBM and solid-state drives SSDs is anticipated to rise significantly.
Major manufacturers like TSMC and Micron technology are expanding production capabilities to meet this demand, which is projected to result in substantial revenue growth from AI-related sales.
2. Market recovery post-pandemic. The semiconductor industry, which faced severe shortages during the COVID-19 pandemic, is now poised for recovery.
With the reduction of excess inventory and an uptick in consumer demand, manufacturers are beginning to see improved conditions. Reports indicate that memory prices, particularly DRAM and NAND flash, are set to rise due to increased demand from AI applications. Analysts expect memory prices to increase by 13% to 18% in 2024.
Driven by the resurgence of AI-related technology and applications. 3. Geopolitical influences.
The ongoing U.S. China trade tensions are reshaping supply chains within the semiconductor sector.
Export controls on advanced chips and materials have led to a realignment of global trade dynamics, forcing companies to adapt.
For instance, the CHIPS and Science Act in the U.S. is incentivizing domestic semiconductor manufacturing with over $200 billion pledged to revitalizing the sector. However, geopolitical tensions may also challenge supply chains, affecting availability and pricing.
4. Investment initiatives.
The CHIPS and Science Act has catalyzed significant investments in domestic semiconductor manufacturing.
Companies like Samsung and TSMC are benefiting from these incentives, which will allow them to expand production capabilities in the U.S.
This is crucial as demand for semiconductors is set to soar, particularly in the context of AI and advanced technologies in various industries,
including automotive and telecommunications. 5. Consumer behavior shifts.
As consumers increasingly prioritize technology-enhanced products and services, industries must adapt to shifting behaviors. The retail sector in particular is expected to leverage AI for personalized shopping experiences, enhancing customer engagement. Innovations in e-commerce and digital retail strategies will be critical in capturing the anticipated surge in demand.
6. Sustainability and regulatory pressures. Sustainability initiatives are also influencing market dynamics.
The automotive industry is shifting towards greener alternatives, with increased demand for EVs driven by regulatory measures and consumer preferences for sustainable products. Companies will need to innovate rapidly to keep pace with these changes and meet both regulatory standards and consumer expectations.
7. Future projections and challenges.
While the outlook remains positive for a 50% surge in demand, challenges such as potential overcapacity in semiconductor manufacturing and geopolitical uncertainties could pose risks to this growth trajectory.
Some analysts express concerns about the risk of overproduction, which may counteract the anticipated demand surge.
Companies must navigate these complexities carefully to sustain growth in the face of evolving market conditions.
Conclusion.
In conclusion, the anticipated surge in market demand across the automotive, retail, and telecommunications sectors by Q2 2026 is underpinned by technological advancements, market recovery, geopolitical dynamics, and shifting consumer behaviors.
Companies that strategically align their operations with these trends, invest in innovation, and adapt to regulatory pressures will be best positioned to capitalize on the upcoming growth opportunities.
As the landscape evolves, continuous monitoring of market conditions and proactive adjustments will be critical for success in this rapidly changing environment.